Hello, my name is Troy Adkins, and I am the founder and owner of Adkins Capital Management. I want to talk to you today about the key housing events that have transpired in the U.S. during the fourth quarter of 2018. During the fourth quarter of this year, the actions of the Federal Reserve as part of its Federal Open Market Committee operations, and a review of the trend in the Federal Reserve federal funds rate and the national average mortgage loan interest rate for a 30-year fixed-rate loan for the calendar year period of 2014 through 2018 were the primary topics of discussion. This movie presentation also provides an overview of the home price level for a select group of cities that make up the Adkins 60 City Home Price Index, and it provides a wealth of information for prospective homebuyers to use in order to make a prudent home purchase decision. This presentation was written, narrated, edited, produced, and published by Troy Adkins. I am the founder and owner of Adkins Capital Management. Adkins Capital Management is a privately owned and independently operated company. Our exclusive focus is on residential real estate. Our company is not affiliated with any parties associated with the residential housing industry. Our mission is to bridge the gap in the residential housing market, where deficiencies in education, public policy, regulation, product structure, and personnel have created an environment where prospective homebuyers need objective information and useful analytical tools in order to help them make a prudent home purchase decision. As an investment professional, I have more than 15 years of real estate analysis experience, more than 10 years of institutional investment consulting experience, and more than 8 years of freelance financial writing experience. I am also the author of more than 25 published articles. For more information about my background, skills, and experience, please visit the Adkins Capital Management website. With this overview in mind, let me now turn your attention to the primary housing topics for the fourth quarter of 2018. For the last quarter of 2018, the current level and trend in the national average mortgage loan interest rate for a 30-year fully amortized fixed-rate loan, and the level and trend in the Federal Reserve's federal funds rate were the primary topics of discussion. For the fourth quarter of 2018, the national average mortgage loan interest rate for a 30-year fully amortized fixed-rate loan began the quarter at 4.71% and ended the quarter at 4.84%. For only the second time since June of 2011, the national average mortgage loan interest rate for a 30-year fixed-rate loan exceeded 4.61%. In order to better assess the current mortgage loan interest rate environment, prospective homebuyers should remember that the national average mortgage loan interest rate for a 30-year fully amortized fixed-rate loan reached an all-time low of 3.31% in November of 2012, and it reached an all-time high of 18.63% in October of 1981. In view of realized and expected labor market conditions and inflation, the Federal Reserve elected to raise the range for the target federal funds rate by 25 basis points from 2% and 2.25% to 2.25% and 2.5% during their Q4 2018 Federal Open Market Committee operations meeting. The Federal Reserve raised the key target range interest rate level every quarter in 2018. Prospective homebuyers should remember that a mortgage loan interest rate of 5.3040399% for a 30-year fixed-rate loan would require the homeowner to repay twice the home purchase price if the loan is repaid on schedule and held until maturity. Prospective homebuyers should closely follow the level of mortgage loan interest rates in their community because a rising cost of debt will increase the amount of interest expense that prospective homebuyers will need to pay for their mortgage loan. This in turn will place downward pressure on the price level of residential housing in their community. The following chart illustrates the rising trend in the Federal Reserve federal funds rate and the national average mortgage loan interest rate for a 30-year fixed rate loan from 2014 through 2018. The implication of the information in this chart is very important for prospective homebuyers to understand because an increasing cost of debt will have a dramatic hidden impact on their financial net worth. For example, the current relationship between the new target federal funds rate and the national average mortgage loan interest rate for a 30-year fully amortized fixed rate loan implies that another 25 basis point increase in the federal funds rate will push the national average mortgage loan interest rate to the 5.3040399% threshold. This means that the periodic interest expense on a $100,000 loan will increase the total cost of the loan to $200,000 over the life of the loan. Clearly, the hidden cost of interest expense is a significant amount of money that prospective homebuyers need to take into account before deciding to purchase a home. With this in mind, prospective homebuyers should use the Adkins Residential Home Valuation Analyzer in order to assess the cost for interest expense, as well as the cost for property taxes, maintenance, homeowners insurance, private mortgage insurance, closing costs, and brokerage fees. By analyzing all of these costs, prospective homebuyers will be able to make a prudent home purchase decision. Now that I have provided an overview of the events and trends that have taken place in the residential housing environment for the quarter, let me turn your attention to the proprietary finance-based analytical methodology and cloud-based residential real estate analysis software application that you can use in order to provide an assessment of the price level of homes in your community. The Adkins Residential Home Valuation Analyzer is an internet-based software application that analyzes the relationship between the median home price level for a city and the median household income level for the city. With this information, the software application takes into account the most recent month-ending national average mortgage loan interest rate for a 30-year fully amortized fixed-rate mortgage loan and the assumption that no more than 28% of pre-tax household income should be spent by homeowners in order to repay the principal and interest costs for their mortgage loan. By utilizing this information, the Adkins Residential Home Valuation Analyzer can accurately assess the price level of homes in your city. From the first analytical perspective, the Adkins Residential Home Valuation Analyzer determines the level of underpricing or overpricing of homes in your city by calculating the mortgage loan interest rate that justifies the price level of homes in your city. With this information, the justified mortgage loan interest rate is compared against the national average mortgage loan interest rate in order to accurately assess the level of underpricing or overpricing of homes in your city. From the second analytical perspective, the Adkins Residential Home Valuation Analyzer calculates the percentage of household income that would have to be spent by the people that live in your city in order to justify the price level of homes in your city. With this information, the justified percentage of household income amount is compared against the traditionally accepted household income amount of 28% in order to accurately assess the level of underpricing or overpricing of homes in your city. By utilizing the Adkins Residential Home Valuation Analyzer, you can determine the level of underpricing or overpricing of homes in your community, as well as the magnitude of underpricing or overpricing of a specific home that you are considering to purchase. This in turn will help you make a prudent home purchase decision. For more information about our finance-based analytical methodology and the use of the Adkins Residential Home Valuation Analyzer, please review our finance-based analytical methodology report on the Adkins Capital Management website and watch the wealth of movie presentations that provide an overview of the Adkins Residential Home Valuation Analyzer. Now that I have provided an overview of how the Adkins Residential Home Valuation Analyzer is utilized, let me provide an overview of the home price level for a select group of cities across the U.S. For the fourth quarter of 2018, 34 cities that make up the Adkins 60 City Home Price Index were classified as overpriced for the quarter. Newark, Los Angeles, San Francisco, Honolulu, and Miami were identified as the 5 most overpriced cities in the index. In terms of a relative price level analysis, it is not possible to justify the home price level for the top 5 overpriced cities by reducing the 30-year fixed-rate mortgage loan interest rate from 4.84% to 0%. Therefore, in order to classify the homes in the top 5 overpriced cities as underpriced, it would need to be deemed prudent by prospective home buyers to spend more than the respective justified percentage of household income amount. As an alternative, in order to justify the home price level for each city, the median required household income level would need to increase to a level within the respective range of $68,140 and $242,753. Finally, based on the median household income level, the quarter-ending national average mortgage loan interest rate, and the assumption that no more than 28% of pre-tax household income should be spent in order to repay the principal and interest costs of a mortgage loan, the justified home price level for the top 5 overpriced cities fell within the respective range of $137,517 and $458,984. Prospective homebuyers should use the Adkins Residential Home Valuation Analyzer in order to assess the level of overpricing of homes in their community. On the other side of the spectrum, 26 cities that make up the Adkins 60 City Home Price Index were classified as underpriced for the fourth quarter of this year. Oklahoma City was classified as the most underpriced city in the index, while Wichita, Charlotte, and Anchorage were classified as the second, third, and fourth most underpriced city in the index based upon their justified percentage of household income amount. Wichita was classified the second most underpriced city based upon its higher justified mortgage loan interest rate. While Little Rock, Kansas City, and Pittsburgh had the same justified percentage of household income amount, Little Rock was classified as the fifth most underpriced city based upon its higher justified mortgage loan interest rate. In order to classify homes in the top 5 underpriced cities as overpriced, the national average mortgage loan interest rate would have to increase from 4.84% to more than the justified mortgage loan interest rate amount for each city, or it would have to be deemed imprudent by prospective home buyers to spend as much as the justified percentage of household income amount in order to repay the costs of a mortgage loan. Prospective home buyers should use the Adkins Residential Home Valuation Analyzer in order to assess the level of underpricing of homes in their community. Given the recent events that have transpired in the residential housing market, and taking into account the fact that buying a home will likely be the largest single financial transaction that prospective homebuyers will ever make, and the bulk of their net worth will likely be tied up in their home, prospective homebuyers should use the Adkins Residential Home Valuation Analyzer in order to analyze residential real estate from 5 financial perspectives. First, prospective homebuyers should use the Adkins Residential Home Valuation Analyzer in order to assess the level of underpricing or overpricing of homes in their community. Second, prospective homebuyers should use the Adkins Residential Home Valuation Analyzer in order to assess the largest amount of money they should spend in order to purchase a home. Third, Prospective homebuyers should use the Adkins Residential Home Valuation Analyzer in order to assess the amount of money they would need to earn on an annual basis in order to be able to afford to purchase a specific home. Fourth, prospective homebuyers should use the Adkins Residential Home Valuation Analyzer in order to assess total home ownership costs expressed as a percentage of household income. And fifth, prospective homebuyers should use the Adkins Residential Home Valuation Analyzer in order to assess how much a home would need to appreciate in value each year in order to offset the costs associated with owning the home. By assessing residential real estate in this manner, prospective homebuyers will be able to make a prudent home purchase decision. For more information about the Adkins 60 City Home Price Index, to watch our catalog of residential housing movie presentations, or to subscribe to use the Adkins Residential Home Valuation Analyzer, please visit the Adkins Capital Management website at residentialrealestateanalysis.com. This is Troy Adkins, saying thank you for taking the time to listen to this presentation.